Paul Schatz, the president of Heritage Capital. Still with us, of course, is our guest host, Dr. Linda Hue. She is fellow in economics, Oxford University. Paul, Santa Claus going to show up yet again this year?
Santa's already come. The NASDAQ is up, what, 4 days in a row already, so Santa Claus is here. Yeah, I think the problem is that in the last 5-8 years, the week between Christmas and New Year's hasn't been as sparkling as it was in the 20 and 30 and 40 years before it. So certainly I would not leave my positions untended next week.
Yeah, what's your position on the whole fact? I mean, how do you reconcile the fact that, volume is going to be light, you have the VIX below 20 for the first time since pre-Lehman, and we've had this huge run-up in the markets? I mean, what does that portend for the early part of 2010, do you think?
No change from what we've been seeing the last 1, 2, 3, 6, and 9 months. It's more of the same. This is a liquidity-driven rally, plain and simple. There is a tsunami of money in the system. It's free and it's easy. That's going to continue until the trend fails. It's that powerful. But keep in mind, people are talking about the VIX. The VIX can stay low for many, many days, weeks, months, and quarters without any harm in the market. It did it certainly in the early 90s. We saw the VIX low for years, and then we saw it really low too in the mid-80s. So I'm not concerned about the VIX until it begins to spike, and I don't think that's going to happen until at least late first quarter of 10, maybe even mid-second quarter of 10.
Paul, it's Ross. If this is still the liquidity-driven rally, when you hear Charlie Evans, Chicago Fed president, saying the extended period for low interest rates could be as short as 4 months, does that mean, therefore, in 3 months' time, the liquidity story's over, if that's when, if potentially rates move at that point?
I think the Fed is jawboning the markets. I think they have been. The last thing the Fed can afford is a flop like they had in 07. So I think the Fed is telegraphing, listen, rates are staying low for a long time, but be prepared, it's not forever. I think they're going to move in such tiny incremental steps that I'd be shocked if it was in the next 3 months, frankly.
Well, Paul, if that's the case, right up until the Fed raises rates, whenever that happens, and the Fed has fired all its bullets and liquidity runs out of the system, then that means that we could be seeing flatline growth for the first half of next year, possibly into the third quarter of next year.
Yeah, keep in mind, this recovery, if you will, this less worse scenario, it's really been about the government pumping money, throwing as much money at the problem as possible. At least from my research, in the history of the world, it's never worked. The economy at some point has got to stand on its own 2 feet, not with stimulus and free money. It's got to stand with real growth from the bottom up. And frankly, when that happens in 2010, middle of 10, end of 10, I don't think it's going to be able to. I think we're going to probably have either flatline growth, as you said, or a double dip.
If that's the case, if it's a scenario of flatline growth, would it be wise for investors to get into the very basics and even dividend plays?
A dividend play, I think, are overblown right here. People are reaching for yield. Every time we hear the news story, the people are trying to find any little bit more yield they can find in the market. Bonds aren't doing it anymore. Bonds have had this meteoric rally. So I wouldn't chasing yield has never worked in the past. I wouldn't do it now. I think you've got to play with what's working, frankly. You've got to look at, technology for a while. Semiconductors have retaken a leadership role. I think you got to look at semis. I've been liking healthcare almost since the healthcare reform thing started. I think healthcare into pullbacks is another good place. Staples into pullbacks. Nobody likes utilities, and if you ask about yield, I look at utilities first and foremost.
What do you make, Linda? Paul's out there saying, Paul, you're in the Stiglitz camp.
I think it's probably quite true we are in a liquidity and funded boom. What worries me is that the market really should be based on fundamentals. That doesn't mean you don't jump into the market to play.
But they're based on the fundamentals of there's a lot of liquidity in the system.